The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we've had a great 3 hours here at TFNN. John, Larry, you've got Tom. Tom comes back again 4 o'clock till 3 o'clock till 5 o'clock. Program all the way through today. This is a very special day because in the Chapman Wave methodology, we've been waiting for certain turns in the market. And we will find out starting, it's already started, but I think confirmation today in various stocks, various indexes, whether or not, see, in a bear market, every bit of news, good news, bad news, whatever it is, sees lower highs and lower lows. The one missing ingredient at this particular point is the volatility index. The VIX is not seeing a rise to the upside commensurate with the failing Dow, failing S&P, failing New York Stock Exchange. So that in a sense is saying, hey, there is still residual internal strength. I'm suspecting that we are starting to see this week. Remember 3 weeks ago I said it was a really important week. We saw how important it was. We made peaks in Apple. Look at this. Apple APL monthly chart. Look, peak F in the 120-minute chart. Take that away. You've got peak E at 134 back in, what's that, April? Back in May, the first week of May. 134, peak E in the weekly chart, and the daily chart is all the way back here. Look at this, a very interesting chart. You've got that double top, 133.60 back in February. Peak G comes all the way down, starts a brand new buy mode, gives a beautiful left side, right side price time match to 134.54. That was the last week of April, yep, 28th of week, the 28th of, no, right on the 28th of April. Pulls back, tries to rebound, fails, and then it's making low lows and lower highs. And I would suspect that's a right arm extension failure, A minus. And we're down way below the 200 period exponential moving average of 119.36, down at 114s. I would suggest very strongly that if you are an Apple fan and you've been long Apple for a very long time, this is not a bad time to take some profits. If you haven't already, this is absolutely the time to say, hey, you know what? There is more downside risk than upside potential at this particular point. Not only that, from 114, you've got 20 points to retest the high. I don't know what news there could be to get all the way back to that high of 134.54. And the technicals in the weekly are very poor. The monthly chart is now turned down. You've got what, two trading. They're not even two. It's 1.25 trading days into the new month of August. So we really don't know where this candle is going to close. My suspicion is it'll close below 118.17, 118, let's call it the 9-period exponential moving average. You've got the stochastic now under 80%, MACD's crossing negative. It's going to take some special, really unbelievable special news to see. You've had a 238% incline in the extension of the Fibonacci. I suspect that we'll be coming back down. If you break 109 support, that's the 138 retracement failure. If you break that, then the next level of support is right there at 104.63. So I think that 10 points down is going to be a lot quicker than 10 points up at this stage for Apple. That's just the way I'm looking at it. Let's go to the numbers. The Dow is down 11. Let's do them with the charts right now. INDU. The Dow is down 11 points. Now this would be the third day under the 17,679 9-period exponential moving average resistance. If it does close down there, not only that, you've got 17,717 as the 200-period exponential moving average. I think you've got, is that right? That can't be. Let me just do this. Hold on a second. 17,687 is the number that I was looking for. I thought that was wrong. And so right there at this crossroad, as the 9-period moving average is about to cross below the 200-period moving average, which always suggests that this is the time where people use this particular indicator, suggests that this is the big signal on the sell side. I say, no, no, no. You've already been in that. This is where you're getting very close to a rebound. So the big rebound will be if the Dow, this is a Chapman wave Roman candle right here yesterday. If the Dow at any point in the next 2 days, without breaking above 17,690's resistance, if in fact it goes down to 17,550 and holds there, even if it's just a few hours, there's a real good chance you're going to test the low of the day. It's yesterday at 17,496. And if you break that, then 17,399 is the next in the arch formation. That would be the left side low. The weekly chart is testing, as we speak, is testing the red dashed line. Is that a pink or red? Dashed line support level. And here as well on Friday, if you close below, if the Dow closes below 17,000, especially 17,520, but especially 17,500, it's a big negative, and that'll be the same in the monthly chart. So this is a very important phase, and today is very important for a number of reasons. Let's go through this. The S&P, SPX.X, is trading right now at 2,097. It's only down 26 cents. Underneath the 9-period moving average again today, so far, days just begun, not even 2 hours into the session. Now what's important about it is that in the weekly chart, a close below 2092 on Friday would suggest there's a real good chance of a quick run to the 2082. Now it's 2082 to 2078 as really important. Let me double check on that. As really, you have 2078 as really important support. Why? Because a close underneath that would take you to the wick of last week's candle. And there again, the 2063 area will be the next target. So I'm looking at an arch formation. Powerful, powerful. On the way up, your very sharp moves up, but then it's the arch forms because you start to make just slightly higher highs. And then on the way down, you start to make lower lows. And that's exactly what's happened. So now what we're looking at is those are the parameters. On the upside, remember 2112, very important, but 2122 would be very positive. I just don't know how it's going to get there right now. IWM is trading in the weekly chart, third week actually is trading under the 9-period exponential moving average, sitting right on the 121. Is that a 121? I think it is. Let's call it 119. So 119 is key support in the monthly chart. It's really 120. 120 is the very important support. So under 119. Trading at 122.63 right now. Stars of failure mode in the monthly chart for the first time. The QQQ series making an arch formation. My guess, I'll draw it in right now. My guess, and it's only a guess right now, I'll be able to say with much more surety that it's going to happen. But at this point, 111.29 down 31 cents. That's a little bit because of Apple. But if the QQQ series breaks 110.50. Look out below because it's going to test the 109.79 level of the 28th of July. And then the weekly and the monthly charts start to become a little bit more vulnerable, but it's still holding up pretty well overall at this particular point. I want to get to copper just quickly before I do anything else. Why? Copper is trying to form some kind of a little bit of a support level here in the daily and the weekly. And that monthly chart, remember that monthly chart I drawn in, that very long-term uptrend support level, and I'd said a close below on the continuous contract, the January 2015 low of 2.402 would suggest that we're going to test the green and red lines, and that takes you to 2.30. And right now it's at 2.3615. Very important phase right now, this week, even as we speak, in high-grade copper, because it's telling us about world economies. Let's go to the gold. Gold, it's ready for a little bit of a bounce. Why? Because at 1091 on the continuous contract, you've got yet another arch formation. Hasn't yet taken out the low of, what are we looking at here? Hasn't taken out the low of July the 31st. July 31st, the low was 1079.20. I think it will, but right now you've got this little bit of a sideways, very narrow range trading sideways pattern. And my guess is that if 1080 is the support that we got to watch. A close below 1077 immediately says the 200 period exponential moving average in the monthly chart of 1025 would become a magnet. I don't know if it'll be a target, but it becomes a magnet to draw the price low. That means we've got to look at the dollar and say, hey, the dollar's holding up fairly well. Look, there it is, held the 9-period exponential moving average at 97.53, 97.40s to 50s. And at this particular point, it needs a push above 97.77. And then I think what will happen is that the dollar will target the 98.15 level. If it can close above, let's say that again, 97.77 on the index, not only will that be a positive, but it'll address the issue of the monthly chart, of the weekly chart, that needs a break for leg C above 98.15. And if you don't have to close it, you just have to sneak above, one tick above, and then all of a sudden the monthly chart becomes the focus, and that monthly chart has 100.39, and it's working very hard to try to get the MACD still very powerful. Stochastic's good at 80% in the monthly. I'm a little worried about that weekly chart. It says at any point if the dollar suddenly starts to trade under 97, no, I want to say 96.80s, that'll suggest that the long thin wick of that candle of 3 days ago, somewhere in there we're going to be testing that. So this is a very critical time, because the TWM, a question in the den, what is TWM is? Oh, pro shares. TWM, pro shares. Let me come back to this. I'll just short the Russell 2, the IWM. I need to look at the IWM because this is the Russell 2000. And let me just put it this way. Roman candle yesterday. If the IWM starts to trade at 121.8, 121.95 or lower, for any 2-3 hour period, watch out below, because the 121.41 is the 200 period exponential moving average. That will become the target. And then your TWM will rally. And where will it rally to? It'll rally to about the 36.40s. It's the 35.58 right now. Or it'll go about 36.22. That was the high of yesterday. And vice versa. If the IWM rallies, then the TWM will pull back and test 34.97. It rallies really strongly. All right, now what am I missing? Silver, I haven't looked at silver for a little while. So I didn't quite finish gold. Silver is actually a nice candle today, and it's a leg B, maybe a peak B in the 120-minute chart. I would suggest to you that this is a stopping point, a way station, a fueling station, or refueling station for the way down, and then any rally will fade. And if the silver goes underneath 14.30, it's going even lower. I'll be right back. Dow's down 14.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So we're looking at gold, we're looking at silver, and let's look at CL, which is the crude oil. Crude oil is, that monthly chart. We've been looking at it for so long. I said there's a potential for a 1-to-1 to the downside. And that says, oh man, it's impossible to be 1-to-1. You're talking about the 20s. Well, I have to tell you something, that if you look at history and you look at the way that history deals with hubris, when you think of the oil-rich countries and how they've been overspending and overspending and overspending and overspending and overspending, you say to yourself, wait a minute, if that is their resource and they're overspending their resource, what happens when that resource for the first time in generations, not 5 years or 1 year, but in generations, suddenly gets cut off? What if America is becoming so fuel independent, despite all the negatives that are thrust upon it? What if the glut in oil is forcing producers to produce more and more? Why? Because the price is going down. They've got to keep up their gains. If it was really just sole ownership, maybe 2-3 companies or countries, then you'd be looking at a situation where all they had to do is stop production, slow down production, cut back on production, and all of a sudden prices will rise. Scarcity produces higher prices. And you remember what it was, Ed Young, wonderful Ed Young, who used to say, the cure for higher prices is even higher prices, and the cure for low prices, even lower prices. Well, what we're looking at here the crude oil continuous contract is suggesting that crude oil continues to be, and this is really the most important point. We've had Jerry from the Back Bay talking about seeing crude oil go down, and he said, what happens, if Iran goes online with different, hey, when we look at this, what we're looking at is a price that says the only way it's going to change, not just have a bounce, but the only way that the crude oil will have a real turnaround is if there's some crisis that says the production of oil has to be curtailed or is being curtailed, or because of blowing up or whatever it is, you have fewer potential growth areas in oil or delivery areas. So I read the other day that there are tankers all over the show with oil. They don't know what to do with the oil. They can't store them. So here we are. We're looking at crude oil, and I think it's going down. Therefore, you say to yourself, okay, wonderful. So the airlines should be soaring. The airlines have come down for a very hard landing after soaring back in 2009 to 2011, making a double top in the XA. Oh, whoops, that's the wrong. That was the XAU. XAL, I meant to do that. It's the same thing. XAL soaring from 2012 right to 108 in the XAL, the ARCA airline index. Now it's pulling back. There is a bit of a bounce here, and this is going to be very important. That's why I've been saying 3 weeks ago was really important. Today, this little period now between today and Wednesday and Thursday, really important for many reasons. Why? We're going to see if, in fact, this leg F to the downside becomes a trough F, and this trough F produces a result that says, if I can just get that, there it is, that produces a rally in the airline index, which is at 94.78, up 55 cents. It really should, with oil like this, it should be up at 106. It should be challenging the old high of 108. So something's going on economically. And you remember I discussed this, months and months, maybe the beginning of the year, that I said, I believe we're going into a slowing down process. And the slowing down process is being represented by different sectors, and the rotation will continue. So here we are. Airline index up 55 cents, should be much higher. I can just tell you this, then the next 3 weeks, if the airline index takes out 89 support, that monthly chart, the technicals are very poor, but it's holding at the 9-period exponential moving average. Let me make this a little clearer right there. And this one here looks like that. So we've got a Chapman wave falling X formation that can turn into an H formation, and that'll be very negative. So yeah, under 87, that monthly chart kicks in and goes even lower. I think, yep, in the den we've got slowdown big time. I think there is a slowdown. So now let me just quickly. I think I heard a ping for an email. Yeah, okay, Chris. Hi, Basil. Would you please think/discuss the possibility that we are having a correction of time? I know Tommy's calling for a big price drop, but we have been in this price ranging from December 2014. Your thoughts, please. Your student, Chris. So yeah, thank you, Chris, for that question. It's a very good question. I've been dealing with it for months and months and months, saying my thinking was we would take out 17,500. But the evidence is that, let's just go to the chart right here. The evidence is that we've been in a trading range for all year.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Okay, so now what we want to do is there are a couple of things we want to do. So here's the Dow chart that I show my subscribers every day with a very big report. Where is that report? Let me just see here. There. Do I have it? Did I get rid of it? Is it still there? I think I got rid of it because I always like to make room for the next day. Yep, I got rid of it. Okay. Basically, what we're looking at is the Dow chart with a low of February at 17,034. It's February the 2nd. And then it runs to 18,244 in the Dow. And then it goes, and then 18,288 becomes the 2nd of March top at peak E in the Chapman wave, pulls back to 17,579, and that becomes the trading range, slightly higher to 18,351 all-time high, but really it's basically in a few hundred-point trading range, up and down, no, not a few hundred points, about a 600-point trading range, really nothing when you compare what we've come from in percentage terms. And then it goes all the way down, hits the 17,600s, bounces, pulls back to 17,465, the first break under 15,000, 17,500 on the 7th of July. Can't stand being there, runs up to 18,137, fails, makes a lower low at 17,399. Now comes the big issue. And this is the reason why I'm talking about a number of things in terms of how we're looking at markets with repeated chart patterns. And I said for a long time, we're looking at the H pattern or the arch formation as being key because lower lows and lower highs sets up a pattern that says no matter what happens until something spectacular takes place, the market, the tide has changed. And that tide says that we could go down. Now we're kind of running out of time. I've got a low of on the 10th at that 17,100 to 17,000 area right there with the inside Chapman wave inside wedge pointing there. Well, we're still way above it, 500 and something points. I don't know how we're going to suddenly break down, but it doesn't matter. What we're really looking at is a pattern that says trading under the 9-period moving average, trading over the 9-period moving average, the maroon. So all I'm looking at here is, Chris, you're absolutely right. We have used time, but within that time, now I can go to the next thing that I wanted to talk about. Look at this. I'm going to, so the XAL has pulled back pretty sharply, considering it was at 108 and made a low of 89, so that's 90. It's no big deal. So it's 14, 15 points. So it's about 13, 14%. Okay, pullback. But what happens after this is going to be really important. Why? Because if crude oil suddenly bounces, you might see the XL pull back. If crude oil goes lower and the XLL still, the airline index still pulls back further, let's include the IYT. The IYT is having a better bounce. This is the bounce that I was expecting in the airlines, and it hasn't really unfolded yet. But look, you're missing that 152.37 level in the iShares of the Dow Jones Transportation Average Index. And what we're looking at here, the high today is 151.92, trading at 150.85, a dollar lower. So we're looking at transports in general being harbingers of a tidal change. They're already in a tidal change to the downside, trying to find some support between, it's 150 right now, between 145 and 143-ish. A break in August of that low would be very negative. Okay, so now I've got that. Now let's go to the IBB. And until the IBB really breaks down, and I should mention that subscribers are short, we have short positions, and until it really breaks down, what we're looking at is the monthly chart. Let me move this to the monthly chart of the NASDAQ Biotech iShares, holding really well. There's nothing wrong in the MACD, moving average convergence divergence in the monthly chart. There is something wrong in the stochastic, but it's still at 89%. That's very good, but it's much lower than it was. It means it's starting to deteriorate. The relative strength index is a little bit lower than it was back in 2014, but it's holding quite well. On balance volume has gone to ABCs in a leg D. We're going to be watching this closely. So far, no real sign in the monthly chart of any turnaround. Aha! But we get to the weekly chart, MACD is turning down negative. Stochastic's now at 77 with a widening fast-moving average, the green line, to the red line, slow-moving average. The 377 level is still fantastic support to hold in the weekly chart of the IBB, but a close below 375 this week on Friday is a negative and says, uh-oh, that big spike up on all those news-related events in the sector, those stocks that spiked up, I'll show them in a moment, in the week of 17th of July, and then going to another high on the week of the 24th, and then failing miserably, that says, be careful. Because once again, a close below the low of the week of the 31st, below 369, at any point suggests that there is deterioration in the weekly chart, and that would change the weekly chart. As yet, I can't even say it's in a sell signal, even though I've got the down arrow at a peak F. Technically, I have to have at least one, if not two, closes under the 9 EMA to really officially do that. But I've got the technicals, the price and the peak F, as well as the technicals suggest that that down arrow is going to be it. If there's a new high above 400.79, believe me, that recycles and we go ABC is now new leg D. And then you've got that inside track resistance. So I'm looking at the IBB and I'm saying patterns are very familiar. We know this leg A can often go to a B. B can often fail. And if B fails, because it goes under 379, let's say 378, it's a 383.45 up $1.32. That would be that arch formation forming with no confirmation yet. You need to close below, close below the 377 area is really needed. And then you've got your arch formation. Here's the other thing, the XLV. XLV. An unbelievable winner. Look at that monthly chart. Nothing wrong. Leg F, maybe it'll recycle, calling it F for now. S&P Select Healthcare Spider Fund. The MACD's starting to flatten out, but still good. Stochastics at 91%, still very good, but way below. It keeps making lower highs. Relative Strength Index is making slightly lower, lower high. And on balance volume, A, B, C, D, kind of a double top, D, E right there. So no sign yet. Haha, now we come to the weekly chart. MACD, been failing, but the price has been holding the 9-period moving average. Stochastic 77 and flattening out. On balance volume having a big spike to the upside, and that's going to be the key if it turns down very, very soon, by next week if it turns down. So where are we? Well, in the XLV, one of the absolute best, I remember hearing John Logan using his TAS market technique and saying that this is just one of the very best sectors. Well, in the Chapman wave, we try to time using my technical tools. We try to time the tops in the markets. We've done that many times over the years. Sometimes we don't stay long enough. Sometimes we get the exact top. I said that was the top in Apple a long time ago. We haven't had a position in Apple. I just haven't really been wanting to short Apple because my focus has been on other things. But probably that's really a intermediate term short because I think there's a hat trick top there. Okay, so let's go to the XLV. Now let's just run these through. So if there's a failure here and you start to pull back from, first of all, a break into the 77.30 says, oh, watch out, 77.40 is just an eye blink away and I'm going to take it right out. That's what the XLV would say, because the technicals are on the verge of either breaking up with the MACD, stochastics at 68% but rising, or failing right here. That's why I'm saying this is such an important couple of days, right at this moment, for some of the indexes that have been the absolute best. Peak D may be forming in the 120-minute chart. Maybe it's about a turnaround. So that maybe what we need to do is to go through Johnson & Johnson. Johnson & Johnson peak A, B, C1, C2 in the 120-minute chart. Peak F, way back, Doji peak F in November at 109.49 and keeps closing under the 9 EMA in the monthly chart. So the monthly chart says real good chance that there's a tidal change for the first time in the monthly chart. Let's go on to Pfizer. Fabulous stock. What is it doing? It made a new high just 3 days ago. Peak F potential in the daily, potential peak F in the weekly, and a potential leg F, well, still rolling leg F in the monthly. Technicals in the monthly are still very strong. Not so good in the weekly, and the daily looks a little bit overbought, but still okay. So let's give it a partial thumbs up and say, yeah, that can help. Let's go to the next one. Merck, not good. Monthly chart says is in a sideways trading band. Yes, it could go a little higher, but basically it's starting to struggle and is at 58.84. There's only going to be a big change if it can break above 61 in the next 2.5 weeks. And if it does that, I have to admit that there's a chance it could retest the old high. So let's give it a neutral, okay? Neutral. Gilead, G-I-L-D, Gilead Sciences, trading at 103, down 57. Made a peak E. I believe it's a peak E in the weekly chart at 123.37. Big move, 123.37, plunges down to 108, round number low. That was last week. Had a very nice bounce, 10-point bounce. And now I think we've got to look at it and say, no sign yet by price, but the technicals are deteriorating in all time frames. And if Gilead breaks to a new high above 125, that'll be really positive. I just would have to say, you know what, this is the ever-ready bunny, just keeps going. But I can tell you this, if it breaks and closes under 115 in the next 3, 4, 5 days, that's going to be very negative. So we're watching this one closely. So now you've got your top stocks acting okay, but all of them kind of using it's really a consolidation, high-level consolidation, no real strength the last 2 days. Looking at Amgen, one of the great biotech stocks, this is a peak F. There are so many stocks that had news-related peak D, E's, and F's the other day. On the 31st, Amgen had a 176 round number low, spiked up to 180, 181 all-time high. It's pulled back to 174, starting to weaken, and that monthly single egg, well, it's a D, in the weekly says, be careful, because a close below 169 in the next week and a half would suggest that Amgen has made at least an intermediate term type top. All right, so let's go on. Amgen, Medtronic. So Medtronic takes over Covidien. And I was suggesting that there was a chance that they'll pay a penalty for overpaying for Covidien. So far, the prices, are you kidding? You know, what are you talking about? This is the best thing that happens since sliced bread, or whatever the expression is. But I'm looking at the chart and I'm saying, hey, you know what? I think I'm going to be proved right that Medtronic, great company, and Covidien was a fabulous country, Irish company. I think Medtronic took it over mostly because of the tax relationship that there could be. Anyway, single leg A in the weekly. Medtronic at 78.05, up 5 cents. If it closes in the next week and a half under 76, that'll be a heads up to say the 74.81 level of the monthly chart, 9-period moving average, that's going to be tested. MACD's turning down, still good, but turning down. Stochastic is 84%, but starting to make lower highs. I'm looking at this and I'm saying potential vulnerability. I'm completely wrong if Medtronic at 78.05 goes up 3 points in the next week and a half. That will say, what are you talking about? I'm never going down, ever. Amgen, Medtronic. United Health, this is part of the Dow as well. UNH, I think it's made a top. I think it's made a hat-trick top. I think that that United Health, Managed Healthcare, has got a G in place in the monthly chart, G/C maybe. It could still make a D at some point, but this stage looks to me like it's going into a sideways trading range at 120.84. It has, I'd have to say that a break above 123.5, no, 124.20. I'd have to say, maybe I'm wrong. It's going to retest the highs. But any pullback that fills that gap below 118.50 says, watch out, I'm coming back down. I'm going to test the mid to low teens. Okay, so that's United Health. Limited upside, I'm saying. All right, so I could go on and on and on. Let's go to Biogen IDEC. Look, gaps down. Remember, we had a call from Jennifer. I said, be a little careful, take something off. And it went a little bit higher. No, it did pull back below that point I said. And then it went higher and then kaplop. Misses earnings, etc. It's at 330. Just recently was up in the 400s, hit 480.18 in March. And now look where it is. 300 was the low. That is huge. I think this is a hat-trick top in Biogen. I think its best days are gone for now. It's going to have to re-energize. That could take 6 months, 8 months maybe. But let's go to the next one, which is Celgene. Oh my goodness, I went through these last time. Am I doing this again today? All 30 or whatever it is, or more of them, maybe they're 40, I don't know, in the XLV Holdings Healthcare Spider. So Celgene, I think, has made a top in the daily. It's holding okay, but I think it's not going to go back to the high that was made. There's that gap, and then it kept going higher. So on the 23rd, it went to 140.72. I think it's making a hat-trick top. Daily, weekly. We'll see if the monthly this month doesn't close. It just has to go 140.73 and extends leg E. So I'm going through these and I'm saying, hey, these guys are looking tired. I'll be back. Dow's down 14, S&P's down 1. Basil.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So I went through all those. I had I want to go to Jerry in the Back Bay. Jerry, how are you?
Good. How are you?
I'm well, thank you.
I wanted to bring something to your attention.
Yes.
Gilead
Yep.
is making like 80% of its earnings on this one huge product that they charge $100,000 for, and it's going to peak next year. Merck is coming on with a product, so it's pretty widely known or expected that Gilead has huge amounts of money. They're making extraordinary profit. That's why it's only 10 times earnings, is because people know that product is going to start to peak and go down, so that they are going to make a huge acquisition. And
right.
I'm trying to figure out, who could it be? Maybe the BIBB. So I just want to throw that into the hopper, that there's an extraneous thing here that is very confusing. Gilead's got a ton of money, but it's coming from one major product that is going to peak next year because Merck is coming on with a competing thing. And so that's why Gilead sells at 10 times earnings.
So
for them,
let me speak to that issue. I don't want to talk about it in purely technical terms. I think it's great. It's very important to talk about these stocks in fundamental terms as well. Why? Because it's the fundies that really produce the goods in these companies. And if you miss that point, then you're missing a big part of the equation. My thinking here is that this is the first time that you've got some kind of, you say confusion. This is the first time that you got some kind of confusion in the sector of the IBBs.
Yeah.
I don't think that people who assess and do the commentary and do the analysis are really able to pinpoint with as much specificity as they had before about the costs, about the incremental value there.
I agree.
If in fact it becomes more selective, you can only give the product to certain groups of patients. Not only that, what about the whole Blue Cross Blue Shield thing with paying only specific for specific recommendations? And that's going to be a big thing. And that's why I'm saying I'm trying to put it together. And the way I'm putting it together, I think it's the same thing that I'm going to be looking for in the healthcare that I've been looking for in the IBB. And that is to say that there is now an issue that says, both on a fundamental level and on a technical level, we are looking at a picture that says now things are not clear. The clouds are starting to form. And that's the first time when you get the clouds, when you're able to say, maybe we can look at a hat-trick top. So that says not just a short-term price movement, but more an intermediate term to longer-term pullback. That's what I'm thinking, but there is still enough residual strength to maybe pop these things a little higher. I think the last one came out today, and that's Regeneron, REGN, whereas that is still up. Now it's up 32. It's giving back a huge chunk of the gain. It had a 586 round number open, went to 605.93. I think, Jerry, you and I are going to look at this real closely over the coming week, because that's going to be a very important period to tell us exactly what's going on. Thanks so much for calling.
Thank you. Thank you.
Thank you very much. So, folks, just before we're about to wrap up, do I hear music? I just wanted to say, if the VIX actually rallies today and the VIX at 1278 starts to see a push into yesterday's candle of the 13s, 1355 was a high. I don't think we'll get there. But if we can get into the 13s and hold, that'll be a sign to say, hey, be real careful here. We're looking at a market that has the potential to, regardless of the news, make lower highs and lower lows. And until we see the VIX index actually start to climb and hold at the end of the day, we're going to see enough stocks rotate to keep ameliorating some of the selling, so that instead of getting, like yesterday, 170-point decline, you get a close that's in the 100 area. So we'll see what happens here. So just to be very specific, INDU. I'll be back later this afternoon with Tom. But just in the meantime, watch this closely. If the Dow goes into midway of this candle of yesterday into the 17,560 and holds, you might go to the low of the day of yesterday. I'll be back later this afternoon with Tom for an interview. Thanks for being here. Check out my opening call and have a wonderful day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.